Hey guys, hope you're having an awesome day. I thought I'd create a video on the red to green move. It's a move that we see almost every single day in the stock market, and I really want you to benefit from this, understand the move, and then also recognize when it's forming so that you can jump on it and capitalize off that move. Now, it's important to look at certain factors that determine whether or not this move will be successful or not. One of them is volume, the second is whether or not the stock is gapping up, and the third is whether it's based on news or the chart setup itself. Now we're going to look at a stock that has shown a red to green move consistently, and that is HTGM. So let's go into that chart and have a look at how that's repeatedly done a red to green move for the past 3 days in the market. So let's go right to the beginning. I'm just going to go 3 days back. Starting from Wednesday, you can see this did a red to green move. It ripped and then sold off. Now it did the same thing the day after on Thursday. Red to green, had a massive rip and then sold off again before slowly climbing up. And then here comes Friday, which is today. Again, it had a red to green move and then it had a huge spike and sold off. After these spikes, you notice that it just sort of goes sideways. And then most of the time, especially if it's Friday, people don't want to hold the positions over the weekend. So that's why it sells off and then it comes back down to these support levels. In this case, that's $7 right over here. So let's go further in detail and see these red to green moves play out. Starting with Wednesday. Now, when I say red to green moves, let's have a breakdown and sort of figure out how a stock is doing a red to green move. You always want to look at the first candle. So if you look at this first candle, it shows where the stock opened up. Now, the top of this candle is where the stock opened because it's a red candle. So right at the top where it's 716 is where the stock opened. Now, the bottom of this body is where the stock closed in that 1 minute candle. You can see over here at the top, this is 1 minute. So if the stock opened up at 715, in that 1 minute, the stock was at 711 before moving on to the next candle. But in that same candle, in that same minute, the stock dropped all the way back down to 701. What this means is it opened up at 716, people started selling their shares and it came back down to 701, but then people bought at 701, which is why it went straight back up, all the way up to 710, which is shown on this next red candle. So in the first minute, open up at 716, dropped to 701, came back, closed at 710, and in the next candle, it opened up at 710, and it went to a high of 715 before coming down to 705. Now, the third candle is green. The reason is because it closes higher than where it opened. So the third candle opened at 706, went down to 705, went to a high of 710, but then closed at 709. Now, after this candle, you can see another green candle. So let's have a look at the next green candle. Now, it's interesting to note that this green candle is the start of a big move where lots of volume comes in, lots of momentum comes in, and this is where traders are sort of looking at the stock on their high of day scanners, and it gets a lot of attention, which is why you can make profit off of this consistently. So this third candle, it goes from a low of 705 to a high of 725. Now, the reason is because when it breaks this mark right here, the 715, that's called a red to green move. You can see the first candle opens up at 715. So when it goes below, when people start selling, it's okay. Like, you don't have to panic because that's going to happen anyway. But when it comes back up, it shows that this stock is more bullish than bearish. More people want to buy than those who want to sell. So when it goes above 715, it shows that people want to run up this stock. They believe that the stock is worth more than what it's currently trading at. That's why it always works. So if you look at this over here, right when it crosses that 715, look at the volume bars. You can see the sudden increase in this volume bar right below it over here. In fact, it's even this one. So compared to the previous one, you can see the spike in volume. Then it gets even higher because people recognize that this is a red to green move. Then some people just sell off. So there you can see the volume's not that great after that. It's just sort of going sideways before this huge spike. So these are latecomers. They're seeing it on the scanners and they're like, hey, we have to get a piece of this. We have to jump in on the action. So you don't want to be part of this crowd. You want to be the early bird special, which is right over here. The way you do that is by recognizing this setup and then also putting your buy entry right here at this 715 break. So in this case, you can see it went from 715 and it ran to a high of 781. And this is consistent. Like, look at these green candles. You got 1, 2, 3, 4, 5, 6. 6 green candles before one pullback, and then it shot right back up to 781. And that's a massive difference. Like if you got in at 715 and you sold at 781, that's about 65 cents, which is excellent. Like you can do this every single day. And it's not only on HTGM, this happens on a lot of stocks. But once you recognize this red to green move, then you'll be able to nail this on almost any other stock. So let's see what happened the next day. So pre-market on Thursday, you can see this is testing that $7 mark. And right before the market opened, it actually dipped below $7. So $7 is a key level. In fact, now let's look at the first candle on this. So the first candle shows that this opened up at around $6.99 before selling off. It came to a low of $6.62 before picking up again. So these are all the people that sold off before the stock picked up again. And it shows that it wants to run. So what do? You look at where the stock opened up. Again, we mentioned that the stock opened up at $6.99. So what you would do is place a buy order at $6.99 and take this for a scalp or even a 20-30 cents run. So say you went in at $6.99 or even $7, you can make a whole dollar, because usually when these whole dollar break through, then there's a lot of volume that comes in and that pushes it up. So let's say you went in at $7 over here. You can see the volume spikes right over here. In fact, there's a spike over there as well. People are getting ready. There was a bit of sell-off and then more buyers came in over here. So you can see this entire rush. In fact, with these, it's kind of hard to use as stop losses because there's so many bids and asks and the spread is huge. So if you put in like a 5-cent stop loss, you'll get taken out. So it's important to give it a bit of room to run. So usually what I do is I do like a 10 to 15 cent stop loss. That way, if there's a bit of correction, because at these resistance levels, sometimes people are just selling because they want to take a small scalp. So it comes back on down, it takes out sellers and then it shoots right up. And at that point, I'm still in while others got taken out because they put a tight stop loss. So let's see what happened in this case. This went from 7 to 7.95. That's almost a whole dollar. And it's exactly the same setup as I showed you before the previous day. After this touches 7.95, it sells off. But again, this is a red to green move. In this one, I'm actually going to draw a line so you can see it more clearly. 6.99 resistance, and then this is building higher lows. So you can see that red to green, and this is where you would buy. This would be your buy entry. And if you're buying at 7, I would honestly, like personally, I would put a profit target at around 40-50 cents, which is right over here. But this actually ran a lot higher because stocks like these, when volume comes in, it gets a lot of momentum, and that's really good. So let's see what happened the day after, because this was Thursday. Now, if you move to Friday, again, look for the same red to green move. You can see pre-market there was a bit of activity, and that shows that this stock would actually show up on the scanners, and therefore it would get attention of traders, and that's what it's all about. Because when these show up on scanners, then people put them on their morning watch list, and when it's on the morning watch list, then it spreads like wildfire. It spreads on StockTwits, Twitter, all these social media platforms, and traders are really focusing on that stock. It's on their scanners, it's on their alerts, and if it shows up like crossing a certain price, then they would jump in on that, and that's really what we look for. It's all about the price action and movement as well. So let's have a look at how this performed the red to green move. Looking at the first candle, the stock opened up at 7.58 before selling off, and then it came back up. Now, since it's very tight, it shows that it does want to run and it does want to break out of this resistance level. So the buy would be about 7.58. You can even be safe. So you can do like a buy entry of 7.60, but let's see where it runs from 7.60. It goes up to this level over here, 7.70 before selling off, coming back to 7.60, where more people buy because they missed out on the first couple of seconds and they're like, hey, we need to get in on this. So although some people took a small scalp, other people actually got in. And this buying volume right here, look at this green candle. That's about 30 cents. That's crazy. That's all from these buyers just trying to get a deal, like just trying to get in for this run. And that's what moves you up. So it's important to recognize that you should be early. You should be right here where it does a red to green, and then allow other traders to really push that price forward. And while they're buying, you should be selling. So you should be closing up your position and 10 cents, 20 cents, 30 cents, whatever it may be. But as long as you're selling into that buying pressure, because you don't want to be on the side where people are starting to sell and then you're selling at the same time. That way you're sort of selling over here where it's coming back down and you can get caught up in this. So look at your profit target and really take your profits. Be grateful for what you're making on the stock, because most traders won't make money on this. Most traders will fail. They won't have the correct stop loss. They won't have the correct price target. They'll miss out on the entry. They'll buy late, or they'll just be bag holders. They'll be buying right here at the top and then holding it right when it comes back down, and they'll have to close their position somewhere over here. They'll take losses and they'll walk away from the desk. But you want to be that person who nailed this setup. So just be prepared and get that early entry over here. So there you have it. I hope I was better able to explain what the red to green move is and how you're able to profit off of that. Again, guys, you'll see this in different types of stocks. So it's not only about these mid cap or large cap stocks as well. It's mostly penny stocks where you see these moves. And just like I said, be aware, be active when you're sort of screening your stocks in the morning. Follow other traders if you have to know what's getting hyped, where all the volume and attention is, because each morning you'll see a couple of stocks show up on your scanner, but only one or two of them are actually going to be successful and have like a crazy run. In order to narrow down to those two, you need to look at the chart, like the 6-month chart, and then also understand where most of the attention will be towards. That way you can focus on those two stocks, and when the morning bell rings, you know exactly where to put your attention towards. Like me personally, this morning I was actually in on HGGM. The reason is because I was watching 3 stocks, JAGX, AKTX, and HGGM. But when I saw HGGM form this bull flag over here, also known as a red to green, because this was actually a combination of both. If you look here, this is building higher lows, and then it's got that resistance line over there. So usually when it's red to green, it would make like a U shape as well. But in this case, it was holding up really well. So I was looking at this right when it did this move over here, 758, and I myself got a late entry. So I got in right at the top of this candle around 770, and then I took this run all the way up till 820 is when I closed my position right at the middle of this candle. I remember I saw a lot of bids coming through, but I thought I might as well just lock in my profits. So that's why I just took like a 20-30 cents run and I called it a day. And it's fantastic because you can do this all the time. It's beautiful. That's why it works most of the time. And this is what it's all about. Like, this is why we trade, because we can spend just a few hours in the day and make profits like this and then walk away and enjoy the rest of our day. And you really have to know what setups to look out for in order to profit in the day. Most traders will only show their profits and then they won't show their losses. But the truth is, a lot of people lose money in the stock market, and you shouldn't be one of them, because if you invest time, if you have the knowledge, and if you're determined to be one of the best traders out there, you can be. I've seen beginner traders go from absolutely nothing and they're making like thousands of dollars per day. And it's not a story, a fairy tale, or anything. They put in that effort. They put in that hard work. They spent hours upon hours, like day and night, just studying, going over these charts, following other mentors, like understanding these different setups, and then utilizing them as well. So putting like a trading plan as well. One thing I talked about was actually creating an Excel spreadsheet. That's something I do personally. To log my trades and then also monitor those trades and understand how to sort of benefit from refining that process as well to better yourself as a trader. So hopefully you took something away from this, you understood the red to green move, and I really hope you can implement this in your strategy starting Monday morning. If you guys have any questions about this move, you can always email me at tradewalpha@gmail.com and I'll be more than happy to respond. As always, I'll see you in the next video.